How we going on, people? Luke here from LAGFX. We are back today with a new Sunday Sessions video. If you are new to this series, it's basically where we come to a few markets that we feel hold good potential and we break down some of the analysis that we have performed, giving you guys the opportunity to not only learn how we analyze the markets, but also how we come to tackle and execute positions based on the analysis we have completed. Now, there's a few pairs I'm going to go over in today's video. If there are any pairs that you feel I should analyze in future videos, then please leave them in the comments below. And I'm more than happy to make a case study around that pair, or I can include it in future Sunday Sessions videos. Now, if you guys do go on to enjoy this video, you learn a thing or two, please leave it a thumbs up. All the support you guys provide is very much appreciated. And if you have any questions or queries regarding the analysis or the setups that I create in this video, then please leave them in the comments below as well. Now, with all that being said, let's jump straight into today's Sunday Sessions video. Okay, so the first pair I'm actually going to touch base on is the Great British Pound to the Australian dollar. This is a pair that we have been quite heavily involved in over the course of the last week or so. You can see here we placed a short position and we are looking to get involved in further shorts from this area of interest. The reason why this is highlighted as an area of interest is because we have this wick to the downside followed by a wick to the upside. As we know, this suggests bullishness within this bearish leg. This area as well has been left unmitigated, so I'd love to see price trade up and into this. That's exactly what we've been delivered with, and it looks as though now we are seeing price distribute in preparation for that down move. So what I want to see now, in order for us to get a valid entry, is for price to correct itself initially, and then to see this down move continue. So you can see here that we are left with that same wick to the downside followed by the wick to the upside. So it'd be great to see price come to correct itself to set its first lower high and then go on to trade us lower in this market from this area. Now, as we go down to the 5 minutes, you can see that we are given another area of interest here. You can see how this looks to have been mitigated by this green wick. If we just go down to the 1 minute time frames, we can get confirmation that yes, that area has been mitigated. So what I'm going to do is I'm actually going to move this up, and I'd love to see price trade us all the way up and into this here. This allows us to get a very refined entry, and then we can look to obviously take part in short. So my bias for this market is to definitely be short. I did actually go short in this market on the latter end of last week. I was involved in Trader Tom's live stream on Thursday, and I predicted a short opportunity from here. And we've obviously seen bearishness being put in, which is brilliant. So anyone who got involved from that, well done. But ultimately, we are looking at getting involved in further short positions. We just need to see price correct, clear any remaining demand in order to continue trading us lower. So what I'm going to do is just get a little path tool and show you the path in which I believe price is going to take. What I'm also going to do is mark this zone out just so you guys can go and apply this to your own charts. Perfect. So now that we have this zone marked out, I would highly recommend that you guys go and do the same. As I say, we want to see price trade up and into this. For price to trade in, break structure to the downside, that confirms the end of the correction and the start of the next impulse. And this is where we'd be looking to take part in short positions on the Great British Pound to the Australian dollar market. Okay, now moving over to US dollar CAD. Last week, I predicted that we were going to see price push up from this area. We have seen price push up over the course of this last week, which is brilliant. So anyone who got involved in long positions from this, well done. What I'll do is I'll actually throw up the snippet from Sunday Sessions video last weekend just so you can see that I did predict this move and how it's played out perfectly. So you can see I've kind of drawn out a head and shoulders pattern for us. If you look at this here, you can see that we have a shoulder followed by a head followed by the second shoulder and then the leg that should take us lower. So this is a clear pattern that I am expecting to see price produce. We just want to see price reject well from this area of interest before trading us up and into the supply zone. So now that you've seen that, you'll know that I wanted to see price trade up and into this zone for supply to be introduced, and then obviously we take part in the bearish leg that follows, following the impulse, correction, impulse in this higher time frame bearish swing. Now, what we have been delivered with is a high. This low here created this high. We've then been delivered with a lower high, and it looks like we're breaking the low. So we may see price correct itself initially, but I am expecting price to trade us up and into this. If I don't see price trade up and into this, I would presume that this is an opportunity missed. And I'd have to wait and see price trade into a valid area of interest in order for me to get involved in this market. I am definitely a bear and I am looking to go short. We just need to have that right confirmation in order to get involved. So let's just correct the analysis here that we've got and just update everything. So we obviously want to see a continuation in bullishness, traders up and into this, for structure to break to the downside, price to then correct itself, and then we get involved in those shorts. So if we just add a bit more detail to this, our position would look something along these lines, and the path in which I want price to take is just like this. Now, whether price does that is a different story. It looks as though price is actually distributing and prep for a down move, so it may be wise to look for areas of demand like this that price may come to correct itself down and into before a continuation higher. So I will mark this out and give you guys the area and price just so you can go ahead and mark this out for yourself. Okay, perfect. So you can see here the area and price in which we can expect price to correct itself from if price does give us that down move. However, I am wanting to see price actually trade up and into the supply zone to clear this area of supply before that continuation lower. So definitely looking for short positions, but if we see price continue to break down, we can expect a potential reversal from this area in demand. Okay, now moving over to the XAU US dollar market. This is the gold to the US dollar. As you can see, I've got this area of interest marked out. I'm wanting to see price trade up and into this before a continuation lower. However, I'm going to mark this out as well as an area of interest that we could potentially look to go short from. We just need to see where we get that S&D flip from. So what I'm going to do is mark this out. Perfect. So I've gone ahead and marked the zone out for you all. This could be another area of interest that we could potentially look to go short from. Obviously, we need the right confluence in order to actually execute those positions. So as we know, that comes with the likes of a break of structure in and around the zone as this concludes the end of the correction and the start of the next leg trading goes lower. However, we are seeing that price is still following the laws of bullishness within what looks to be a corrective wave. So I am still optimistic in which price should come to traders all the way up and into this one before we see that move lower longer term. And then as we know, that would be following the higher time bias of a bearish market. You can see here that we have an impulse, correction, impulse. We're still following the laws of bearish structure on the extreme higher time frames. So if you haven't done already, go ahead and mark these two zones out. These are probably the only two zones that I can see that are unmitigated and need clearing of orders. So these are good points of interest that we could look for those potential shorts from. Okay, now finally to touch base on the NASDAQ. This is a market that has been extremely bullish. It's increased in value. It's actually been setting some new highs as of recently. However, we are starting to see price distribute and really slow in volume to the upside. So that would tell me that price needs to come and correct itself before any kind of continuation higher. As we can see, there's been a lot of bullishness present with very little bearishness in sight. So it would be nice to see price clear this entire area before that continuation higher, which gives us the ability to obviously take full advantage of short positions to clear this area. In order for me to look to go short, however, I would like to see a break of structure to the downside. This is just something that we are always looking for, as it acts as a very strong piece of confirmation of a change in trend. So I have gone ahead and marked out the last protected low within this bullish structure. This low here created the highest high. We have since seen lower highs and lower lows being introduced. If we get a break of structure to the downside, we can then expect price to come and correct itself initially before a longer term move lower. So keep your eyes peeled for a break of structure in and around this area and price. So we're looking at the 17300 mark. I would love to see price trade beneath this. That would obviously give us the confluence we need. We can then look to get involved in the corrective wave to trade price lower to clear this area of inefficiency. Once price comes to trade down, I am obviously expecting then a continuation higher in this market. It's evident now that price is just extremely bullish and seems to be heading in that direction without any signs of slowing down. So yeah, I'd love to see price come to clear this area before we have that move higher. As you can see, it happened here. So we had a large move higher. price came down to correct itself, and then we saw that next leg trade us up to create those new highs. So obviously nothing is set in stone as of yet with this market, but as soon as we have that break of structure, that's when we can start to look for those bearish opportunities based on a corrective wave that should follow from the break of structure. So I am looking for bearish opportunities in all markets. We just need to wait for the corrections to finish in order for us to get involved. We need that confirmation of a break of structure in and around the zones, just so we have the confluence that these areas of interest aren't just absorbing price with a continuation to the upside, and it's actually rejecting from these areas. Okay, so what I'm going to do now is pass you over to James, and James is going to provide you all with some analysis. If you do go on to enjoy his analysis, leave some comments below, and make sure you leave this video a thumbs up. I hope you guys enjoy, and I'll pass you over now.
Well, obviously, hopefully you've enjoyed Luke's analysis that he's provided so far. Today, slightly different market, to what I usually look at. We're looking at the euro to the Japanese yen, quite simply because I've been looking at some Forex sentiments. If you're not familiar with what a sentiment is, it's a tool to show you kind of which side of the market the liquidity is on. And looking at most sentiments, it's showing that Euro JPY is extremely strong on the bullish side right now. There's a lot of demand in the market. I love to trade markets when there's a lot of volume. When there is a lot of demand or a lot of supply in a market, that's when you can catch the moves, because that's when markets are moving very quickly. You can gain those profits very quick and catch those fast moves that are being backed by the institution. So just starting here on a very high time frame, 3 month. Just to understand, my bias is that we need price to reach this target. That's simply all I've assumed from the 3 month. Given the break, tap into demand, the confirmation demand's taken over, and subsequent bullishness. I then want to see that level of price get surpassed. Come down to the weekly, we can see price in its most recent format. I've taken a couple of demand zones here, and obviously my way of identifying these is I'm seeing a sell and then a heavy buy off, and this buy candle has had some high volume, and we haven't seen price traders back into it since the creation. Any of these would really be valid if we went back through, but we can see that then got tapped. This one here has been tapped back down there, and you could have even identified that there, but you see this wick comes back into to mitigate that and sort of invalidate it. So those are the two valid demand zones I'm looking for right now in this sort of weekly chart, where I'm looking really for price to hold this level here. And if price does surpass that, it's going to be an early indication, yes, not of a break of structure, but an early indication that demand's failing, okay? Because if there is enough demand in the market, we should see reversals from these points. We then go down to the daily to see where price is as of current. In my eyes, straight off the bat, given that the sentiment is suggesting that demand is so heavy, I don't see this as a markdown. I see this as a bit more of like a reaccumulation model where, yes, you could argue we've had this move lower, which has taken out some lows, but we know demand's in control, okay? I know I want price to hit that target above at that sort of 170 level to achieve that 3 month target. So it wouldn't make sense for me right now to see price breaking down, okay? Wouldn't make any sense to me. So what I'm actually going to assume is that we've had a reaccumulation. This is the pivot point of that reaccumulation where, to kind of draw out what a reaccumulation looks like to me is where we've got bullishness. We then have a move that kind of breaks that bullishness before continuing upwards. That is what a reaccumulation looks like. Of course, the purpose of this being created is that there's going to be dumb money looking to sell this now. There's going to be dumb money that are thinking, great, supply is about to be in control. Let's sell from this supply zone. We've had the reaction. Let's look lower. And yes, that could happen. But if we really use the trend that the market's following based on both structure and the Forex sentiment, it suggests to me that bullishness should really prevail. So if we then break this down to look inside of where price is as of right now, we can then try to get involved on what we see here. Now, we've quite clearly seen price trading upwards and doing so in quite a nice manner. And the reason why it's quite a nice manner is because we see the impulses are of high volume and the retracements are of low volume. So what that means is demand is very clearly present. After we've had this sideways movement and caught some people out of the market, that's when we can see the institutions have really, taken control. So I'm quite liking the look of this move. Now, in order to actually trade this, we're of course going to be looking at where price is right now. And we're going to be saying to ourselves, well, where do we want to kind of gain entries from? And, we've obviously got a demand zone right here, which entries could be gained from that we can see prices really hit. If we break through this demand and that demand fails, we'd then be using a higher time frame demand, which obviously in my eyes is probably going to look a little something like this overall zone at the bottom, which demand is definitely present in. And to get a bit of backing on that, if we go to the daily time frame, we can see the last candle in here would represent this, and the buy candle comes to surpass that, which is an indication that demand is present. So if this demand up here fails, I'll then be looking for the demand down here to hold. If that doesn't, obviously that is a sign that the price is going to move lower, but I'd really love to see the demand hold here. Now, using the 4 hour, if we kind of then come down to a 15-minute to see what the market's looking like in terms of entries, yes, we've had a clear tap. We've seen price taken away from that. We've seen some volume created. So realistically, and the fact that price is kind of blown through this quite nicely shows that supply isn't present. Demand is definitely what's in control as of right now. So I will be looking to get involved in buy positions from this market, whether that's from a tap of the demand zones down here. We'll be able to see if we gain an entry at this level to be able to get involved in the market and trade that higher. Or we could even trade, I guess, slightly more aggressively on the assumption that depending on how price opens, and this is something I've actually been looking, I've been watching, as I always have, a lot of MentorFX's videos. As you guys will know, I've always kind of followed what he does and his style of trading. It's the person that I learned smart money concept from. And I've been really looking at his form of getting more aggressive entries in the market when we're in these heavy rallies or on the flip side, the heavy sell-offs. And sometimes you guys will notice, but sometimes the market is just too aggressive to get involved in these big pullbacks. And, to kind of back what I'm saying there, if we come back to the weekly time frame, you see that price throughout this whole markup, we don't see any major pullbacks into major demand zones. We could have been looking at that as a demand zone tap, that as a demand zone tap, this as a demand zone tap. Have we had them yet? No. And by the time we're getting in on those moves, the move's already happened. So it's really important that we have ways to enter in on the market when price is actually moving with a lot of volume. Because when you really think about it, do you want to get involved in the market when there's tons of volume on your side or when there's not? And, if you're not saying when there's tons of volume, you clearly don't understand smart money concept well enough to understand the question. So what I'm going to be looking at here is how can we get involved in this market? Now, something that I have been learning from Ben is something that he calls an ICI, which typically in the markets will kind of look like an impulse, a correction, impulse, correction, impulse. And we're really looking to get involved in this sort of region here where, as we can see, and as prices followed quite perfectly in this region here, we've had an impulse, a correction, impulse, correction, and an impulse, and we've taken off. And the way that we kind of trade something like this, and maybe I can create a video to delve in what I've learned, is we're getting involved in sort of this level, stop loss below that low, and take profit wherever your risk management decides, whether that's like a 2RR, 3RR, you partial here, there, wherever, okay? And if we look inside of this market, we can see that what we would have done to get involved in here is once we've seen that correction come back down, price move up, we've had the sideways, we would have gotten involved in a long, The second that price surpasses the high, with our stop loss, and you can kind of choose whether it's this low or the low inside the structure, but typically you'd go the low inside the structure. And then we'd have our take profit much higher, whether that be at, whatever our risk management decides. I would usually partial at sort of like a 2-hour level, or at least move stop to entry. But we know longer term from the previous analysis that we actually wanted price to come and surpass the level all the way higher at this sort of 170, 169, 170 region. So this is where we'd be getting an entry. I'd only be having like a quarter of the position actually run the full way, if anything. I'm never just trying to look for a full position to run like that, because it is very unlikely. But this is where I kind of would have looked to enter on that aggressive entry. Now, if price does break down and pull us into this and we see an entry there, then cool. We can get involved at that point. But what I'm seeing right now, given the injection of that momentum to the upside, we do need to be a bit more aggressive, and that's kind of how I'd look to get involved in aggressive entries. And, to kind of back what I'm saying there, this stuff happens all the time. If I kind of come down to a 10-minute, just to break this down a bit more, we can see we've kind of had something similar where we've had an impulse higher from here, the correction down to this level, and they've had impulse, correction, impulse, okay? So you've had the move up, the correction, a little bit of institutional control in this region before price is taken off. So again, to manage that trade, once we've seen the impulse, the correction back down, we then look to get involved the second price breaks that range with a stop loss below the low, and take profit wherever you sort of deem valid. So that's kind of how I'm going to be looking to play this out, is looking at that position there. We're either going to see the continuation of aggressive structure, and I'm going to be using that sort of ICI model to get involved at this level, or I'm going to be looking for the deeper pullbacks into these zones. And once we've got those deeper pullbacks, that's when we're going to be looking for some form of entry confirmation to get back in the market. So I'm going to be watching this closely. There seems to be tons of bullish momentum in this market, hence why I'm going to be watching it closely. If you guys would like to learn a bit more about this whole ICI thing and how I'm really looking to confirm entries, if you'd like me to make a video of how it's working for me, I can do that also. But yeah, hopefully you guys have enjoyed this. A bit more of an in-depth one in the Euro, JPY, and obviously the pairs that Luke's covered prior. Take this away into the market. Remember not to exactly copy what we do. That's not what this is here. This is not something for you to just take as, oh, they've said this, so that's guaranteed to work. No, this is simply my personal opinion and predictions. Obviously, make sure you implement in your own analysis, your own risk management. Hopefully you guys have managed to get some information out of that. Hopefully you've enjoyed, ready to smash the markets this week. And to anyone who's not already, make sure you're involved in our Learning Lounge group chat. Because yes, every week we give this overall rundown, but if you want to see how the markets are playing out through the week and how we're looking to tackle them during that week, the Learning Lounge is the spot for updates. It's completely free of charge. There's a community within there where we have hundreds of people sort of discussing with each other on a daily basis how they're viewing the markets, tips and tricks. So it's also a community for you guys to be involved with. So obviously, just to round that up, thank you guys for watching. All support is appreciated, and we'll see you next week in the next Sunday session.